A low tax assessment is not the win that you think it is. It's a warning sign. Sure, it might feel like you're saving on taxes, but it could be completely undervaluing, costing you equity, and scaring off home buyers if you ever decide to sell. Look, if you don't take your tax assessment seriously, you could be setting yourself up for a financial disaster. Picture this, you're ready to sell your home, but buyers balk at your low tax assessment value, which is just screaming, this property is not worth it. Or worse, you apply for a loan or a line of credit only to be denied because your property looks undervalued on paper. And let's not forget the tax bombshell. Your municipality might adjust tax rates higher, leaving you completely blindsided by an unexpected bill. This isn't just about a piece of paper, it's about protecting your financial future, your equity, and your peace of mind. Ignoring your assessment could cost you tens of thousands of dollars in lost opportunities or even mistakes that you didn't even see coming. We're gonna dive into that in today's video, as well as the 3 biggest misconceptions that are completely wrong that most homeowners have about their tax assessments. Plus, if you find yourself in that boat, I'm gonna let you know how to fix it and make it right. So if that sounds good, let's get into it right now. Who am I? My name is Darin with the Germyn Group, a real estate team with McDonald Realty serving Surrey, BC, White Rock, BC, and the surrounding municipalities. If you have questions about buying a home, feel free to use the link included in the description below to book a time to speak with me and my team. So I've got a really fun story for today's video because this is something that actually happened to me and my family back when we bought the home that I'm recording this very video in. So we bought this property back in July of 2020. If you remember what was happening in July of 2020, that was COVID, the first year of COVID, just a few months after it became a really big deal in Canada. So in British Columbia and in the city of White Rock specifically where we live, well, the market at that time was still kind of slow. It hadn't really taken off just quite yet. So fast forward a few months and January 2021 comes and I open my mail. And of course, inside my mail is my 2021 tax assessment. The absolute shocking thing about this tax assessment, however, was the value. And before I let you know how off it was, let me tell you what happened. You see, homes are assessed for their taxable value in July of each and every year in British Columbia. And those taxable numbers are released to the homeowners and the public as of January, about 5 months later. Now, these numbers are supposed to be based on the market value, what that property would have sold for in the market with no undue pressure on either the buyer or the seller, no undue influence on them, just 2 people either wanting to sell or buy, putting together a deal in a regular balanced market. And of course, there is no more accurate number to figure out what a taxable number should be than an actual buyer who bought an actual property in the month of July, the exact month when those homes are assessed. So you can imagine how absolutely mortified I was when I opened the letter from the BC Assessment Authority to see my property assessed for $160,000 more than what I paid for it in July, which is the month where the assessed values are actually calculated. Clearly, this is completely wrong and not something that anyone should experience. So here's some more stuff that you probably didn't know. Did you know that BC property assessments are done without anyone ever setting foot on your property? Assessors rely heavily on computer models, aerial photos, and outdated records to determine your home's value. While this method is efficient for evaluating millions of properties, it leaves plenty of room for error. Renovations, unique features, or even mistakes in your property's records can go unnoticed because no one is physically inspecting your home. That's why it's critical to review your assessment closely because the system isn't perfect, and those errors could end up costing you a ton of money. So let's talk about the 3 things that homeowners get completely wrong about their tax assessments and why that is such a problem. The first misconception is that a low assessment doesn't always lower your taxes. So this is what people think. It seems logical, right? If your assessed value is lower, it seems to make sense that your property taxes would also be lower, the money that you give to the municipality to pay for things like fire, police, schools, etc. Here's the reality though. Property taxes are based on your home's assessed value as a share of the total assessments in your municipality or neighborhood. If everyone's assessments drop, your taxes could stay the same or even increase if your home's proportionate share of the tax burden grows. Think of it like this. Think of your your property tax almost like splitting a dinner bill with your friends. If the total bill goes up because someone ordered champagne, your share might still increase, even if all you had was just a lonely salad. In the same way, your taxes depend on how your property's value compares to everyone else's, not just whether your assessment went up or down. So imagine your entire neighborhood's assessed values drop by about 10%, but your assessed value drops by only 5%. This means even though your assessed value went down, you're going to be paying a larger share of your municipal taxes because effectively your property is now responsible for a larger share of taxes than it was before in comparison to the rest of your neighborhood. The second misconception is that a low assessment value doesn't impact your property. A low assessment might feel like a tax break for most homeowners, but they really don't think about how it really affects their financial flexibility. Let me explain. The reality is your assessment matters when it comes to things like refinancing, home equity loans, or even your resale value. A low assessment can make your home seem less valuable to buyers, lenders, or even you. Imagine trying to sell a car that's worth $50,000, but the dealership appraisal says it's only worth $30,000. Buyers see that low number and think, what's wrong with it? The same thing happens when your assessment undervalues your home. Buyers or lenders may assume it's not worth as much as it really is. So say you're applying for something like a home equity line of credit, and your lender uses your tax assessment as part of their valuation for your property. A lower assessment could mean borrowing less money even if the real market value of your home is higher. And similarly, when you're selling your home, buyers who look up your assessment might assume it's worth less than it is. We're going to jump into that more a little bit later in the video, but here is the third biggest misconception that I see across the entire market for both homeowners and home buyers. And that misconception is that the assessed value equals the market value of the property. Guys, this is completely wrong, and so many people treat it as gospel like it is correct. It's easy to assume that if BC assessment says your home is worth $1 million, that's exactly what buyers will pay. After all, it's an official looking number from a government agency, so it must be right? Here's the truth. BC assessments are just a snapshot of your estimated property's value for municipal taxing purposes from the summer of last year. By the time they hit your mailbox, they are already outdated. They're based on property data from July 1st of the previous year, which means that any market shifts, seasonal trends, or unique circumstances since then are not reflected. And it gets worse. Assessments rely on generic formulas and comparable sales, not even the specific details of your home. Did you remodel the kitchen, add a basement suite? Well, too bad, it's probably not included. Relying on your tax assessment to determine your home's market value, the value that a buyer would actually pay for your property, is kind of like using last summer's weather forecast to plan a winter ski trip. It just doesn't make sense. Sure, it was accurate back then, but it's completely irrelevant to what's happening right now. Just like the weather, real estate markets can change quickly and your assessment is stuck in the past. So I've got some good news for you too, if any of these misconceptions are really hitting home for you watching this video today. Many homeowners don't realize that the assessed value isn't set in stone for their properties and that they have a right to appeal, and other assumes the process is too complicated and not worth the effort. But here's the reality: is the BC assessment appeal process is actually pretty straightforward, and it's also free. In fact, I've actually done it for my own property back in 2021. If you've renovated, added value, or believe value should be removed, or if you believe your property has unique features that weren't really accounted for, you can make a case to have the assessment adjusted. This means you're going to want to check your assessment very carefully if you've received it in the mail. And of course, you only have until January 31st of each and every year to appeal your assessment with the BC Assessment Authority. If your assessment seems a little off, gather documentation like the recent sales in your neighborhood, renovation receipts, or an independent appraisal, and submit a challenge before the appeal deadline. And even if the process doesn't result in a change, you'll have peace of mind knowing that it was reviewed. Look, you should really think about your tax assessment almost like getting a report card. If your teacher made a mistake and gave you a C when you really deserved an A, you wouldn't just sit there and accept it, right? You'd speak up, you'd show your work, and you'd get it corrected. Challenging your assessment is absolutely no different, and it's gonna make sure that your property's assessed value actually reflects what the reality is. If you found this video useful and you think there's more homeowners that should get this message and understand exactly the misconceptions about tax assessments for their own properties, or maybe even anyone buying a home who really needs to understand what the differences are between tax assessment values and market values, please like this video to help the algorithm know to send it out to more people, or consider sharing it with someone that you think will get good value from it, just like you did. And if you feel like you didn't quite get the whole story about market values in this particular video, there's another video that I encourage you to check out, because it's all of the things that are going to be happening in the next 12 months that could severely impact the price of BC real estate. These things you're going to want to pay attention to. That video is coming up next, and I will see you over there. Cheers.